The big mega cap magnificent stocks haven't been so magnificent this week. They haven't been terrible, but they just kind of stopped rallying. In the case of Nvidia, a notable drop yesterday, and in Tesla's case, a drop this morning. Joining us, Scott Acheychek is the CEO at Rex Shares, home of some of the single stock ETFs that have become so popular here over the past year. Scott, welcome to the show. Thanks for being here this morning.
Great to be here, Oliver.
Any thoughts on why we kind of fizzled out in our big tech unstoppable train of a rally here in the last week?
Yeah, I think Nvidia really kicked things off, right? They announced some amazing earnings. They've been on one heck of a run for the year, up 220%. But the reality is that, their revenues grew, astronomically. But there's a lot of uncertainty right now. There's the big China factor. They specifically mentioned they're not sure, the revenues going forward on China. They may have some new products, but that's like a big question mark. That plus the emergence of AMD and Intel coming out within the next 2 weeks, both of them having announcements on some AI-related products. So we're starting to see competitors emerge. We're starting to see maybe some of their sales slow down as it relates to China. So maybe that's some of that early AI dominance is really coming to a little bit of a halt. So, this is kind of leading the way in this like big tech slowdown after one heck of a year. So, it could be just quite simply profit taking, or it could be just quite simply people just buying some more time to figure out how to model out going forward on Nvidia.
I actually like the mention of Intel. I think that's been an underappreciated story. And even though I think people are kind of going to laugh off the idea of them catching up to Nvidia, any marginal closure of the gap between them and Nvidia is symbolic of the potential for some kind of market share creep away from Nvidia, given how it was literally just them for a couple quarters there. So if Intel, can do it, then maybe anybody can to some extent. The other thing, too, from like a technical perspective, is Nvidia's did put in the new record at 505 after their earnings, but that was literally like $1 above the previous high. I mean, what does it mean if they don't get follow through here? There's going to be a lot of disappointed bulls, I feel like, if they don't keep making successive records.
Yeah, I think that's fair, right? But it's also, how realistic is that, right? I mean, their revenue numbers were amazing. The year they've had has been amazing.
Oh, yeah.
It's up 220%. So maybe a slight pullback is completely expected, and we're coming into tax season, so I wouldn't be surprised to see some people capturing some gains.
Okay. What are you seeing with the flows into the single stocks, single stock ETFs? You've got Nvidia X, Nvidia Q, both 2x long and inverse short, respectively.
Yeah, so I think we have a pretty unique view of like the trader sentiment. We have the only 2x Nvidia products in the marketplace. So, since earnings, it's really been a mixed bag. It's been a little more 50-50 in terms of flows, whereas the trading volumes themselves have been leaned much more toward the long product.
Okay, so the money's still coming in the long side mostly?
A little bit. It's a little more 50-50 on Nvidia.
When did that kind of ratio start to even out?
Right around earnings.
Oh, wow. So you're seeing a little bit of sentiment shift, it seems like, in the flows.
Yeah, it could be sentiment shift, but it also could be hedging as well, right? Like I've said a couple times, the stock is really just soared. So this could just be some classic hedging as well.
Okay. What about, we just had this whole conversation about how China's been stuck in a rut, but it doesn't seem like we are really willing to help them out by selling chips. The fact that NVIDIA's got to sanction off chips from their own kind of production line and make them specifically to China. I think any of that matters to the momentum of the companies. That slow them down at all, or is it negligible?
Yeah, no, I think this is one of the leading causes of the slowdown since earnings. This is like a big deal. China was a big client of theirs, and we need to figure out, and we're waiting on like basically estimates to come out, waiting on more guidance from the company on how much of an impact this will actually have. Like, are the new chips or the modified chips that are made for China specific, how are they doing? Is this somewhere where maybe another competitor is emerging because maybe they have a better chip or an easier chip to make?
Okay. Let's talk some Tesla here for a sec. So Nvidia got hit yesterday. Tesla got hit around the Cybertruck unveil. Do you think this is a big admonishment of the truck, or what's going on here?
I think, Alana's a master showman. He's had one hell of a week, right? Telling advertisers to go fly a kite. And then yesterday, how amazing was it seeing a machine gun open fire on a truck? I thought it was a super cool event. He is becoming must-see TV all the time. But I think it's consensus disappointment here, though. We're looking at a Cybertruck that's taken years, longer than expected. We don't have good production estimates on it yet. It is 50% more expensive than it was supposed to be. It's 25% less range than it was supposed to be. I think yesterday was more or less a classic case of done is better than perfect. And he got his first 12 shipments out, and we're waiting on more.
All right. So shares come off a little bit. Obviously, the levered fund to the downside is liking this. The 2X for Tesla. TSLT, TSLZ to the downside. What do those flow ratios look like?
Yeah, what's interesting here is we launched these a little over a month ago, so right around Tesla earnings. And right after earnings, kind of similar to what we're seeing on the Nvidia side, it was really 50-50 as far as inflows into both Tesla Z and Tesla T. But in the last 1 month, the inflows have been at almost 9-to-1 ratio on the long side. So we haven't seen it come off. I think people are still bulled up Tesla. They're still bulled up Elon Musk. But what we're really, I think, going to see here is if Tesla kind of gets caught up in this big tech kind of pullback. Last year, if you had me on the show, we'd be talking about, how big is this rotation in the value stocks going to be for 2023? And I think, what we're seeing the last couple of days is a rotation into some more value here in the market. So it'll be interesting to see if that continues, or if, like I said before, if this is just pure big tech kind of profit taking. All
right. Interestingly enough, it was a good week for General Motors and not Tesla. I mean, very different reasons, but maybe a little bit of irony there, perhaps. Kind of seems like for a truck, you want a little bit more range. I don't know. That's just kind of my 2 cents, especially when they're advertising it with like the camping stuff in the back. I mean, can't go camping too far away. 250 miles.
Yeah, no,
right?
I think that's very fair. And also, in 2019, when this was first announced, the market was a lot different. Right now, you're looking at, they have competition that they probably didn't forecast back then, whether it's GMC's Hummer, the Ford 150 Lightning, or the Rivians. I mean, it's a much different place than what was there a couple of years ago. So as production finally kind of emerges, their cheaper version of the Cybertruck won't be available to 2025. It's going to be interesting to see how these unfold. I mean, they do already have over 2 million down payments. I think some market estimates say only probably about half of those will actually go through to an actual purchase. But I think we're all waiting for more production estimates.
All right. Thanks for the thoughts, Scott, and the details on the funds.
Great to be here, Oliver. Thanks for having me.
Sure thing. Scott Acheychek, Rex shares. TSLT for the double long, Z for the double short, NVIDIA X for the double long, and Q for the short.